Traders, welcome to Institutional Sunday, the #1 trading program on the internet, the only place you're going to get investment bank grade information for free, so stick around. This week got some amazing information, really interesting week with retail sales and a really low claims number. Left us kind of up on the week, 0.3%. Fascinating week really, which I'm going to cover very briefly. Little bit of data, so nothing too crazy, obviously just with the retail sales, but lots to look forward to. So really important session for you to stick around for. As you can see, let's get into it. So as always, like to start with the summary of the week. As I mentioned in the intro, 0.3%, kind of just unwound the losses from last week, which was down 0.3%. And fairly positive week driven by retail sales in particular, as well as a very positive or punchy claims number, which we're going to get into, and we can see that here if you see the summary of last week, which I'll just highlight for you. Retail sales 1.7% on both the core and the headline number, which on an absolute basis about 600 billion for the month in retail sales. The highest number on record. Okay, so is it any surprise that the market is continuously making all-time highs when we've got this type of data underlying it? It's all justified. We also had the unemployment claims number, a post-pandemic low of 268,000, bodes very well for the employment situation, I guess, in the US. So as you can see, overall a very positive week, which we're going to basically cover now. So let's get into that. So as you can see here with the underlying data, I like to bring you the details because details matter, right? This is a very serious business. You can't just be, randomly taking trades of random lines and expecting to get anywhere in this business. Don't work like that. Obviously, details matter in this business, and here are the details. I talked about the almost 600 billion, depending on what cut you take, core, excluding autos, which tend to be volatile. This particular graph, I believe it's the core number, so that's why it's slightly under 600 billion, but you can see here, very punchy number, highest month-on-month number since March, going back to March, so retail sales, very punchy. Why is this important? Because it's a very good sign that GDP, I talked about this in previous Institutional Sundays, absolutely crucial you understand this. GDP in Q4 is likely to bounce back. I saw something from the conference board. They've got their leading index indicators that just came out this week, and they put a forecast in for Q4 GDP of around 5% on an annualized basis. So you can see this is likely to be a very positive impact that's going to cause a lot of the analysts on the street to raise forecasts going into Q4, which will obviously likely have some sort of positive impact on equities. 3 takeaways really. So obviously this is all about the consumer, and consumer spending obviously makes up such a large amount of GDP, so absolutely the #1 focal point it should be. But what does it suggest to us? Balance sheets are very healthy for the consumer, despite all the headwinds we've been hearing about recently, in particular inflation. Number 2, obviously interest rates do and continue to be low, so that's obviously helping the consumer. And then number 3 is, looking for interest rates to continue to stay low. We've seen the 10-year rate around 1.5, 1.6, but historically low rate, so that's obviously helping consumer. So looking for that to continue to stay low. And then finally is, the prices of assets have been going up. We know this. Stocks and homes. That's obviously helping the balance sheets of consumers, and we're seeing that in punchy retail sales numbers. And then finally, my point to all of this is you can see why it was taken so positively, right? That's the bottom line. Why do we care about all of this? Because how does it reflect ultimately in stock prices? Because that is what we're trading. Stock prices, equities, foreign exchange, crypto, whatever. It's all driven by the same stuff. Obviously, I focus on equity, so that's why I'm showing this, but it's all the same. And you can see it, retail sales had such a positive number. Sorry, that should be green, but yeah, plus 0.4%. So very punchy day on that day. So, and that is down to the interpretation of the number which I'm describing here. And then finally, really important as well to take away from this is the gains were very broad based. Okay, so the breadth of gains very, very positive. Okay, so we can see that there. And then just a final mention, so you can see the data here, which I've mentioned as well. This is industrial production, which I don't really want to get into because it's not a massive focal point, but it does point again towards continuing recovery and a lot of positive strength in the economy. We know there's been supply issues, yet despite that, industrial production is at cyclical highs. Okay, so companies are producing goods basically in a broad-based manner, and that bodes very, very well for the economy. Now that's all I want to talk about in terms of the economic data from last week. I said claims was obviously at a post-pandemic low. Talked about that many times. One negative, right, from last week, and why we did end up with a slightly soft tone towards the end of the week, is the oil price basically. So it is worth mentioning just because, let's be honest, oil prices have been going down now for 4 weeks in a row. That's the first time since early 2020 that we've had such a soft move down in oil prices. A lot has been made of this. A lot of people are saying to me, oil prices are crashing. They're not crashing. Okay, let's calm down here. People talk a lot. They're very myopic. They're very short term in their thinking. You got to think over the year. I believe oil prices are up something like 50-60%, right? Up in oil prices. So you got to put that into perspective. Okay, we're having a little bit of a pullback, but like I said, you've got to put things into perspective. But anyway, let's focus on the pullback. Why has the market been pulling back? So you can see crude was off every single day, apart from Monday where it was slightly flat. But look, Tuesday off, Wednesday off, Thursday off, and Friday off, right? And it is important because all the markets are correlated. So you can see equities did brush it off on the Tuesday, but part of that was retail sales, right? So we had the retail sales. So equities kind of brushed off this small slide in oil prices, but then you can see equities fell off on the Wednesday because oil prices fell off. You can clearly see that there. Oil prices did have a slight rebound. Sorry, I said they were off every day, but had a slight rebound, which obviously helped equities again. And then you can see here on Friday we had quite a decline, and that's why equities were slightly soft towards the end of the week. So some of the reasons why oil has been falling off, obviously we know in Europe there does seem to be a resurgence of COVID, which is slightly concerning. Austria is now in full lockdown, so obviously that affects people's perceptions of global demand for energy. Gonna be honest with you, I think it's a load of nonsense. Let's be honest, you've seen energy prices, gas prices, and everything's going up so much in terms of the energy sector. I kind of feel like this is more of a pullback to the 50-60% jump in energy recently, and traders are obviously just, all news outlets are using this as just a reason why it's fallen off. Markets go up a lot, obviously they've got to come off profits being taken. So to some extent I think that's not particularly the reason for it, but undeniably it is something that people will be slightly concerned about in terms of the COVID rates going up. But we haven't, I'm going to show you that in the US it hasn't quite spilled over yet into the US. So we've seen a slight rising in COVID rates, but it hasn't quite spilled over. So that's why I think it's a little bit over emphasized and not necessarily the reason. There are a couple of other things, I've written it down here. The strategic petroleum reserves, there's a lot of talk about governments tapping into their reserves to artificially push oil prices down. But having read, some of the investment banking thoughts on this, Goldman's and Citi and some of the energy analysts, I do agree with what they're saying, which is that all that's going to do is a short-term fix to a long-term structural supply problem. We already know, oil is a finite resource, and there's a lot of demand out there right now with the COVID bounce back. Everyone's trying to keep up with demand. We've seen that with the supply issues, and that's causing a massive subsequent demand for energy use from companies, and therefore, governments can talk all they want about. And in fact, if you think about it, OPEC Plus have actually been increasing supplies throughout this year, and even then we've had a 50% increase in energy. So my point is that you can see a lot of this, I feel, is just talk, and actually this is probably just more profit taking, and ultimately it did act as a drag. Okay, so you can see that here, these two particular days did drag the S&P down, and that's all I wanted to really mention. Another reason why, just finally, I've dragged it out, but the reason why this is really important for you to understand is because I feel a lot of those news items that are apparently attributable to why oil prices went down, because I'm talking to you as if I don't think they're big factors, I do really expect oil to rebound, basically, because I don't think those are actually the big factors right now, or that much the true factors why oil was off. I actually think it was just maybe some profit taking, and therefore I expect oil to rebound, which is what? Positive for other markets, and that's why it's really, really important for the week ahead. And talking of the week ahead, we're finished now. Let's talk about the week ahead. That's unfortunately a chart from last week, just ignore that. So the week ahead, very, very interesting. Just final part, most important part of Institutional Sundays. Obviously, we want to know what we're focusing on the week ahead. I've mentioned to you about oil. I'm not overly concerned about crude oil. Obviously, I'll be watching it, but like I said, I don't think the sell-off is anything too concerning at the moment. Obviously, we'll keep an eye on COVID rates and so on. Quiet start to the week. We do have some housing data, but again, I don't think the market is focusing on that. And that's why it doesn't even show up in any of the medium or high impact news, which I like to filter this by. GDP will be interesting. I don't necessarily think it's a high impact event as highlighted by this calendar. It's kind of the revisions to Q3 GDP, so I'm not sure how much information will be there that the market will necessarily be looking at. We're already expecting a positive bounce back in GDP as per retail sales, so a lot of that is priced in already, so I don't really expect, even if the revisions come in quite strong with the new data towards the end of the quarter, don't think that's going to be a massive plus or a minus. PCE index, obviously with inflation forecast, inflation in investors' minds right now will be quite important, but let's be honest, we already saw the high CPI print right last week, and the market just brushed it off. So even if core PCE does come in strong as expected, is the market really going to be shocked and say, oh my god, inflation is so high? We know inflation is proving to be a bit sticky, so I don't know if that's necessarily going to be a big factor. And then the minutes obviously will be looking for some clues just to see what discussions took place. But at the time of this Fed meeting, I'm hearing a lot of people talking about, and I mentioned it, I've in fact been talking about it to a few colleagues as well, traders that I know, and we're all talking about this, a 15 billion taper potentially being pushed up to 30, 20 or 30. A lot of people are saying, oh, they may have discussed it. Probably not, because the CPI number that we saw that hit 7% or so, I think it was 6.8, 7%, 30-year high inflation number, that release wasn't there at the time of the last Fed meeting, I believe, so it's unlikely we're going to get anything new from the FOMC minutes. And then we've obviously got Thanksgiving next week, so probably going to be a lot of traders away Thursday and Friday. I might myself take these 2 days off. I might be blocking that, but it's basically Thursday and Friday. So likely I'll only be, so that's the takeaway from next week. I'm going to come back to this in just 1 second because I just want to talk about the COVID rates before I go back to the calendar. You can see that here, very interesting, literally up to date, guys. Institutional Sunday, you're getting up to date information. Up to November the 16th, so just this week gone by, you can see the COVID rates are starting to rise, but nothing dramatic. You've seen the numbers in Austria, they're doing that, right? No wonder they're going into lockdown. In the US, nothing as of yet. Retail sales still very, very strong. Unemployment claims coming down. So obviously COVID is not having that much of a drag effect in the US, and that's important because obviously it's the biggest economy in the world. So look, let's wrap up for next week and then we're done. Going into next week, you can see I'm not overly focused on any of this stuff, to be honest, and I think the market will more be considering, any rhetoric coming out to any clues about tapering is number one. And then number two, really important, is the FOMC chairman. So I've put it here. So it's either it looks like it's between Powell, right, Jerome Powell, and which is looking like it's going to be likely to be Powell re-elected. And I've written her name down here. She'll have to forgive, I'm sure she don't watch this, but Leo Brainard, right, is the other candidate that may get the nod. So it's going to be between Powell and Brainard. A lot of talk on the street is that the announcement might be next week. I believe Powell's chairmanship ends next year in February, so she'll be taking over after that. Not very, but more dovish. Obviously, Powell's quite dovish, we know, with the stimulus he's provided. Brainard's likely to be interpreted by the street to be dovish. So if she is brought in, it's likely we're going to see some volatility come into stocks and the market in general, just until they get a feel for what she's likely to be like. So that'll be interesting. I think Powell will be re-elected, but something to watch for. So for me, that's going to be the focus. Any rhetoric around tapering, clues, is that going to be increased? Who's going to be the FOMC chairman? I'm really not probably going to be paying much attention to the actual economic releases. And then Thursday, Friday, really important to note that is likely to be very quiet. So be careful. Personally, I'm not going to be trading Thursday, Friday. Just Monday, Tuesday, Wednesday. Take some time off. Spend it with your family or whatever. Click the link here to subscribe to the channel if you like this. I'm sure you agree. You're not going to get this stuff anywhere, especially not for free. It's absolutely crazy. I'll see you next week.